Hey everybody, welcome to another episode of the Faye Bishop Report, where the culture is news. I got to move away from the celebrity fluff for a minute and get back to business, piggybacking off of a few videos I made about a month ago concerning money, finances, and the current market and what we need to look out for and what it is we need to do. The reason I say that is because I'm still seeing articles like this pop up. And it is pointing to a bigger issue that mainstream media is ignoring because they're so caught up in the Trump phenomenon right now. But it's a really, really, really big issue that we should really pay attention to. As previously discussed, I talked about how the housing market is possibly in for another bust or crisis, and how many people are still underpaid, not being paid enough, or really still living in financial dire straits being created by the current system that's still in place that we're really not doing enough to challenge. For an example, in this particular article, it discusses heavily how predatory lenders are still prowling and targeting people who come from marginalized communities, are underprivileged, poor, or have bad credit. In this particular article, it talks about a form of predatory lending that is called contract for deed arrangements, aka rent-to-own housing, aka buy here, pay here for your vehicle type of lending. It is a form of lending where the lender or financing company preys purposely on people with poor credit or bad credit, or if your credit is literally just above the line. And it's exploitation. And it's something that, in my opinion, considering that we're a quarter of the way into the new century, shouldn't be going on in any shape, form, or fashion. And it just goes to show you how the housing market and the lending industry is still in really bad shape. The banking and lending world and institution isn't going anywhere. Contract for deed arrangements are perfectly legal. They've been legal for centuries. They're not going to go anywhere. So the point of this video is pretty much to lend a few tips that have helped me over the last decade plus, that may help you and your family and provide you with a different alternative where you don't have to necessarily seek out a lending institution to purchase a home, to buy a car, to invest money, to save money, and things like that. In fact, a few of my tips may help you to look at money a little bit differently, because I think that that's the bigger problem here. We don't look at money or respect money the way we should. And it's led us to believe that the use of credit is the only resource that is available to us to be able to acquire things like a home or a car or to save money. Please keep in mind that I'm not an expert in financial planning. I'm only speaking from the mistakes that I've made in the past, how I have rectified those situations, how I have built my portfolio, and how I don't carry around revolving debt anymore. And hopefully this will help you. So without further ado, let's get started. Number one, try to do your best to clear up and restructure your credit. In my opinion, I feel like in order to start learning how to understand money and have a good respect with money and a good relationship with money, you should start with trying to have a good relationship with your credit. Because it helps you to manage money, and it also helps to manage your spending. Despite what many people may say or think, and even if you ever decide whether or not to use your credit, having good credit is important, even if it's something as simple as opening up a checking or savings account. It helps you to maintain a healthy credit score and good flow of credit, and you always want to have that. Credit is important in this country. It's the lifeblood of our economy. When credit is expanding, consumers can borrow and spend more, and businesses can borrow and invest more. And having a good credit line, again, whether or not you're using it, but it increases consumption, and investments like that creates jobs and it expands income and profits. And the truth is that that's how our country thrives. So again, if you want to start having a good, healthy relationship with money and learning how to manage your money, I think starting with your credit score is the best way to go. Again, whether or not you purchase everything in cash, I know I'm a big fan of that, but I still understand the importance of having a good credit score. That's just the way things are in this country. So adapt. Speaking of credit, that brings me over to number 2, where I want to go into who you should and shouldn't try to establish a good line of credit with. My opinion, if you want to establish a healthy flow of good credit, or just establish a form of credit, or try to rebuild your credit in some form or fashion, you should understand who you should and should not establish credit lines with. This being said, my suggestion is that you avoid subprime lenders at all costs. Don't go near them. Don't look in their direction. Don't answer their phone calls. Do not click on any of their internet ads and shred any piece of mail you may get from them. These types of lenders tend to target people with a credit score that sits below 640. And yes, it's on purpose. They target people like this because these types of lenders want compensation for taking the risk. And basically, they're offering you something with usually a too good to be true offer, which pretty much you're able to tell almost immediately, because there's an expectation already in place that you're not going to be able to pay it back. This is predatory lending. The interest rates are always astronomically high. And when you tack on finance and convenience fees, you can see how many of these loans tend to require payments that eat up a significant portion of you, the borrower's, monthly income. So an example of subprime lending or predatory lenders and the way they try to get to you is a buy here, pay here car place. Which, oh my God, I think you should run in the other direction from those places more than anyone. A payday loan, same thing. Contract to deed, rent to own housing, which is really, really bad. Rent a center, or basically anything or any company that advertises a low investment with the promise of an immediate reward. A few subprime bank lender examples are Credit One, First Premier Bank, Quicken Loan. I know you see a ton of internet ads for them. Citadel, and a host of others that are subprime lenders. Even if they don't, because many of them aren't going to outright advertise that they are subprime lenders, like Quicken Loan does not, but you can see pretty much in their advertising how they are making a promise to you, some sort of crazy promise to you, some sort of crazy offer to you, that just sounds just a little bit too good to be true. And it's because they want to take on you as a risk because it means a high reward for them. But the expectation is there for you to not be able to pay them back or pay them on time or fall behind, and et cetera, et cetera. Again, they market to people with bad credit histories. That's just how they are. It's predatory lending. Predatory lending has been something, again, that's been here since the beginning of time. It's not going anywhere. You just have to understand not to go near them. They're just not good people, good companies, good lenders to do business with, or to establish a good credit history with. My personal opinion, the best way to try to establish some form of a healthy flow of credit, try getting a secured card with a credit union. I personally prefer credit unions over banks, but if you prefer to deal with your bank, you can get a secured credit card from them. You can go with Discover or Capital One and start building a history there. The fees and the interest rates are much, much lower. And also those types of lenders are easy creditors to maintain a great, healthy relationship with. They're very, very good with their communication. The customer service is always easy to deal with. They work with you to restore your good credit line. Even if you fall behind a little bit on your bills and things like that, like they have programs that you can get in to, keep your score afloat. Number 3, moving on over to cash flow. Again, I have to stress that I'm not a financial planner. This is just something that has helped me over the years, and it is tips that I am suggesting to you. So again, number 3, try to invest 10 to 20% of your monthly income into either a high yield savings account, some sort of stock, or into an IRA Roth retirement, which is the best retirement that you could ever open up. I want to suggest that you talk to a financial advisor as soon as possible. Look one up in your area, schedule an appointment to discuss your options. But in the meantime, you can start putting 10 to 20% of your money up now. You know what I mean? Like open up a high yield savings now, not a regular savings. I mean, regular savings is good too, but high yield, if you want the best return for your money, and you want to keep, definitely some good cash stored and stashed up for yourself. The best way to go is a high yield savings account and start putting away money now. Forgive me with all the I'm just trying to really choose my words carefully because I don't want this to necessarily come across as a video where I'm just acting as a financial advisor. I'm just sharing tips. So it's very important for me to let you guys know that. So I'm watching my words very carefully. So again, forgive me if I say just a little bit too much. I just want to make sure I'm watching my words while at the same time trying to share the best information that I can with you. The best way to put some cash aside is during tax season. Take about 75% of your return, put it into a safety deposit box. Do not touch it. I think it's best to try to at least keep $5,000 to $10,000 in a safety deposit box. Leave it there. Don't touch it unless it's life or death. It's just a good way, another alternative, should I say, to be able to have some cash on hand in case of an emergency or if it means life or death, or if you want to take it and possibly use it to pay a medical bill or to put a down payment on a house or a car or whatever it is you need to do in terms of your child's education or any other family venture that you are about to start for yourself. It's just better than borrowing, in my opinion. It's really the best alternative to borrowing. Again, that's my opinion. I'm not trying to tell you that's what you should do, but at the same time, I'm trying to tell you that's what you should do. The more often you do this, the more it will become habit. It'll be money that you're not missing or that you feel like you're missing. It also helps you to exercise healthier spending habits. And it also helps you to manage your money a lot better. So, just try to start putting away a lot more of your money. I know you're probably sitting there thinking, okay, this is all easier said than done. But whether you realize it or not, it's easier than you think. It's all about your debt to income ratio and the amount of money that's left over after you've paid taking care of your necessities, such as your utility bills, your rent, your mortgage, and you've covered those expenses. You can put away something as small as $5 or $10 a week. There are apps out there that will help you with that. It all depends on I'm just basically trying to give you an alternative that will help you steer clear of debt and try to use or utilize another alternative other than spending all your money up. And then when the shit hits the fan, your last resort is, well, I'm going to have to borrow, when that's not necessarily always the case. So that's what I mean in terms of that. It really, really, really is easier said than done. It just really depends on what your end goal is, with your money and how to utilize your money and put it to better uses for yourself. Number 4, another way to free up some cash or to increase your cash flow and to increase your income, get rid of your car. You really don't need it. Not as much as you think you do. I'm sorry. Unless you live in a suburb or in a rural area, or you live more than 5 or 6 miles away from your job or where you go to school or your children's school, you really don't need a car, especially if you live in a metro city area. Take the bus or train to work or school. You can even take your bike or your motorcycle or your scooter, or you can walk. That's good too. And if you need to travel a little bit of a distance, a few times a month, use car share like an Uber or a Lyft or some sort of cab service. It's actually less costly. And I mean, you have people out here, going back to this credit thing again, who are financing vehicles for reasons just to drive the same 4 or 5 blocks every month, every day, every other day. It just doesn't make any sense to me. You're not going anywhere. If you really, really sit and measure the distance between work or school or wherever you got to go every day, you are really financing and paying a ton of money on a car note, on the insurance, on the gas, and paying for parking, which is a ton of money, just to go back and forth, ping pong back and forth, like the same spot every day. My opinion, it's a total waste of money. That is money that you can be putting into your savings. That is money that you could be investing. That is money that you can be putting away to purchase a house or to, purchase a vehicle should you ever decide to move a bit of a more distance away from where you work or go to school. It's just money that you actually could have. It's extra money for yourself. My personal opinion, I will never, ever, 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 ever understand why city people drive anywhere. Again, that's my opinion, especially single people with no kids. It will never make sense to me. The only people that I've ever met who seem to get it, the only city folk who do get that, is the people who live in New York City. Like, nobody up there drives. And they shouldn't. I mean, with good reason. And it's really interesting to see people who live in other metro cities drive the same ping pong places every single day. It's like, why are you spending all of that money per month on something that easily could cost you $100 a month? So again, in my opinion, if you don't live that far from where you go to work or school, get rid of your car. You really don't need it. If you really sit down and just calculate everything, you don't really need it. Not like that. So unless you have a family, that's one thing. But if it's just you have to care for, or you and maybe one other person, like one child or somebody like that, you don't really need a vehicle. Number 5, another tip that can help you to increase your income and to free up some cash flow for yourself that could be invested in something else. Stop spending money on useless things such as food and eating out and clothing. You don't need to spend money every day anyway. I personally feel nobody should spend money every day. Me personally, I carry around the same 20 or 30 bucks in my wallet every day. It usually carries me about a good 2 or 3 days before it's spent. This is just I keep it on me for purposes of emergencies because I really don't buy shit. I have everything I need. I don't buy food every day. I don't purchase gas every day because I don't drive everywhere every day. And you'll be amazed once you really sit down and look at it, the tons and tons and tons of cash we burn through for no reason on a regular basis. It's like, I'm positive I have more money than most. I just don't spend it all the time. And I don't think anyone should be spending money regularly like that. I mean, yeah, of course you need to take care of your basic necessities, take care of your bills. Treat yourself every once in a while to something fun, like a vacation or an outing with your family or your friends. But to spend money every single day, no, it's just not necessary. The reason I shared these tips today is basically just to offer a little bit of insight on what you can do to avoid falling into financial traps. Because many of the articles that are being released and that I'm reading up on and that I'm sharing with you, point to a picture of how predatory lending is likely never going to go out of style. It's just going to be something that is going to be ongoing, regardless of what's going on in the market. The market is just going to allow that to bust, as it always does, downturn, and then it's going to reset itself. So everybody, so these banks can do it all over again and target people like you. So I think the best way to avoid that is to try to become more financially literate. Learn how to put the money that you earn to better uses and learn how to control your debt, to get your debt in check. I know it can be hard to do, but it's really not that hard if you put your mind to it. I would have shared a little bit more tips, but again, I don't want this to seem like one of those financial advisor videos because I'm not licensed in that area and I don't want to get in trouble for it. So I just wanted to share tips that helped me because again, these articles, they disturb me. They should disturb all of us. And predatory lending is really, really, really horrible. And if I can, if 5 people who watch this video, if 4 out of the 5 take the advice or 2 out of the 5 take the advice that I've given here today, at least it'll help somebody, and that's why I wanted to make this video and share this information with you. I'm sorry to make it so long. Forgive me. It's probably the longest video I'll probably ever make, so far this year. So let me know what you think in the comments. Share your ideas if you want. I'd love to hear them and share your criticisms too. Just don't forget to like, share, subscribe, and I will catch you guys later. Ciao.